our session this afternoon. What I'm going to cover is, normally I try and cover a pattern of sorts in this session, but what I'm going to do is I'm going to run over an indicator again. We covered one last week or the week before, using the Bollinger Band in a very specific way to define the trend. Today I'm going to look at something called reverse divergence. Maybe some of you guys know it or use it. I'm going to show you how you can find it and then how you can take advantage of it. Okay, it's probably the most reliable in terms of finding divergence, not standard divergence, but reverse divergence. Okay, it's far more powerful than your standard divergence that you pick up on. Okay, before we get going, let's just run through the disclaimer quickly. Spread betting, forex, and CFD trading carry a high level of risk to your capital and can result in losses that may exceed the deposit. The trading of these products may not be suitable for everyone, so please ensure you understand all the risks associated with trading. Information and comments provided here in no circumstance are to be considered an offer or solicitation to invest, and all information is believed to be accurate the date the information is produced. Nothing here should be construed as investment advice, and information provided within the room is the personal opinion of the moderator, not Tradimo. This content does not constitute financial investment or tax advice, and Tradimo does not accept any liability for the content or comments made during the session. Okay, so what I'm going to do is I'm going to look at a Euro-Yen chart. Oh, we can look at anything here, but so I'll just bring up one of these. In terms of what we're going to be looking at is a very simple indicator, which is stochastics. Okay, you can find this on other indicators. I just find stochastics probably the easiest one. In terms of the parameters, the standard is 533. I'm using a 1433 setting. Okay, so I'll click that OK, and that's what you're looking at. Okay, basically this indicator right here. So you'll see obviously price, in terms of the standard way guys will use it, either normal standard divergence where, for example, here price is making a lower low, but the indicator makes a higher low. Okay, that's your standard divergence. Okay, and that's probably the most kind of watched in terms of the way that the indicator will be used. However, the reverse divergence is slightly different. Okay, and what we're looking for here, instead of price making, just draw it quickly. Instead of price making either a higher high or a higher low, so in case of price making a higher high like that, okay, so price is making a higher high, but the indicator, okay, it doesn't follow suit, so it basically forms a high here, okay, but it then makes a lower high. Okay, drawing's maybe not the best, but so you have price moving up, making a higher high, but the indicator peaks make a lower high. Okay, that's your standard divergence found on anything. Okay, MACD, RSI, etc. The reverse divergence is slightly different. Okay, so reverse divergence, where it's very good for using in a trending environment. Okay, and we can define the trend any way we want. But in fact, what we can do, we can go and add in the Bollinger Band after in a bit, okay, because we've covered that in terms of defining the trend. But in terms of the reverse divergence, okay, what we're looking for is, instead of the standard divergence here, what we're looking for is very straightforward. Okay, we're looking for the indicator to make so in the downtrend, we basically have price doing this. Okay, so here's price rallies like this. Okay, but the indicator itself, all right, is doing something like this. So it follows price here. Okay, It follows price in terms of the peaks. However, instead of, you see where price kind of just does a sort of a normal retracement, the actual indicator is making a new high. Okay. So it does something completely different to what price does. So the indicator is making a higher high, but price itself is making a lower high. Okay, so it's reverse divergence as opposed to standard divergence, right? It's a little bit more tricky to spot, but it is definitely worthwhile having a look to see, finding it on the chart, okay? So what we want to do is we want to identify the trend, because this is a very, very good tool. This indicator here, in terms of the reverse divergence trading in a trending environment, is absolutely brilliant, where this one here, your normal divergence, is what gets a lot of traders chopped to bits, or not chopped to bits, but basically driven over. Okay, so this divergence, your standard divergence, as my mentor used to compare it, he says, when a train pulls the brakes, okay, you don't want to be standing in front of it until it stops, okay, because you're going to get driven over. So the essence of the structure, the divergence in a trending environment, it's the same thing, okay, because the indicator, it starts showing divergence, but price literally just takes it out, okay, especially things like MACD divergence. Okay, so when you're in a strong trend, you'll have price kind of down like this, and you've got the indicators, you know, diverging, and all of a sudden, you know, price just keeps plowing lower. Okay, same with, you know, bullish divergence. When we're in a very strong uptrend, maybe here, for example, let's see, when we're in a very strong uptrend, you'll see divergence coming in play here. You see our price is kind of pushing up. Here we're getting divergence from the indicator, it's making lower highs. Again, you know, same thing here, price is making higher highs, divergence making lower highs, but price just continues up and up and up and up and up. Okay, so it's not a very good option in a strong trending environment. Divergence is great for, well, we can cover how we can use divergence correctly in a trend, but for most people are getting killed because they go against the trend because the divergence is telling them to, okay, which is not the correct way of doing things. However, the reverse divergence, if we've got a trend, a nice clear-cut trend in play, okay, what we're looking for is we're looking for this structure here at the bottom, okay. So if I had to draw this on a chart, okay, let's follow this along quickly. What we have, you see price is cruising on the page, okay, so follow price along. Here we have standard divergence, okay, I'm going to mark this in green. I like green for some reason. So here's price making a higher high, but if we look at the indicator, right, we have price making a lower high. This is your standard divergence, okay. So we draw it over the peaks. We've got higher high, MACD stochastic making a lower high. Okay, that's your standard divergence. Now, if we look at the reverse divergence, this is why I say it does take a little bit getting used to. Okay, we have a trend which we've identified. Price makes a shift down, okay, and then it rallies. But look what the indicator does, okay? So follow suit, we have price moving down, the indicator moves up, but the indicator then takes another high, but price has not followed it. Okay, so what we have is price making a lower high, but the indicator is making a higher high. Okay, and this is what we would call reverse divergence. Okay, do you guys see the difference? Okay, so as I said, it can take you a little bit of time to train your eye, just because it's not a standard thing to look for. But this is probably the most powerful in terms of the actual divergence tools you're going to find in a trading environment. Okay, so you're playing the market with the trend. Now, if we look a little bit further, we have the same pattern coming in place. So price moves down and then pulls up. Okay, but if we look at the indicator moves up and moves down, but the indicator makes a higher high to price. Okay, so what we have is the opposite. Okay, this is why we call it reverse divergence. Okay, very, very powerful stuff. And it's very, very good in a very strong trending market. Okay, in a very, very strong trending market. When we range bound, that's when you start finding a bit of bother, as well as when we come to the end of a trend. Okay, so it's not a be all and end all indicator, unfortunately, but it does work exceptionally well. Okay, so if we look across, this is a 4-hour chart. We can look, let's just clear the chart and start looking at something a little bit smaller, like an hourly chart. Okay, so let's have a look to see what we can find. Okay, so in terms of the market direction or trend direction, what we're looking for is, if we have a look at this, we're moving down the page. Okay, so here, if we compare the peaks, here we have a high, price moves down and follow price. Okay, you'll see how the indicator makes a higher high, but price is making a lower high. Okay, so from here to here, and from here, if you look at this, here to here, we have the indicator making a higher high. Okay, the same down here. If we look at this area here, we've got reverse divergence, but on the bullish side. So we have between here and here, between here and here, price is making a higher low, but the MACD is making a lower low. Okay, and you'll see what happens after that. We get a pop up. In this case, we get a nice collapse. Okay, again, okay, let's have a look and see. This is a great example here. We have price forming low, price rallies, it pulls back, but look at the stochastic reading on this. Okay, the stochastic is making lower lows, but price is stabilizing higher low here. Okay, and look at the the rally that ensues from here. Okay. Now, in terms of build strategy out of this, we can look at that at some point. But I just want to point this out because a lot of you guys look at divergence, and you see divergence to price, and you start getting involved, and you're saying, well, look at this. Yeah, we get some bullish divergence. Prices in a down move here, and we need to buy this. Okay. Yeah, we maybe get a little pop up. However, note what sets up. Okay. Far better play is this move. Okay. So we have price making a high, MACD, stochastic making a lower high down there, and then a higher high with price making a lower high here. Okay. You see the difference when we're in a downtrend. Okay. Here, even in this little section here, this is obviously a bit of chop. It still works okay. We have price forming a higher low, stochastic forming a lower low. Okay. Any questions on that, guys? Yeah, so we're playing the divergence in alignment with the trend. Okay. And what you'll see in the method that we're testing in the room, which we'll do after this session, it works very, very well as adder confirmation. Okay. So remember, for the guys that have looked at the method that we're currently working on in the room, we have price in a downtrend, and then we're looking at a pullback. Okay, a pullback with the stochastic. But the added weight is obviously if we've got that divergence. Okay. RSI, I'm sure, work fine. I've been shown it on the stochastics, and I know guys that have traded and done exceptionally well trading it with us. You can get on MACD as well. I personally find the MACD a little bit more difficult to see. So I just kind of focus on this thing. Okay. Now it doesn't, unfortunately, it doesn't always work. If we look at this, we've got two examples here, right? Just follow along here. Here we've got a high. Here we've got a high. And here we've got a high. Okay. Now if we look at the corresponding highs to the peaks of price. Okay. So the first one here basically gets you in trouble. Not there, sorry, here. Okay, so price kind of moves up. So we could be looking at this one at some stage, possibly. However, this one here kind of keeps you in the dry. So it could, it doesn't have to be on the exact corresponding peaks, the next high to the next. You just need to kind of play around, and that kind of just comes with a bit of experience. Okay, so you see from here, obviously price makes a higher high to this one here where prices stays below this. So you can wait for confirmation, for example, like a candle close or something. That'll kind of, get your stochastics crossing over. this high here corresponding there. So we're kind of pushing up, gives you a little bit of bearish price action there. This one kind of corresponds all the way up there. Another push up with some divergence after the reverse divergence. So, you kind of play around with it a little bit here. Price is kind of stable there in this area here, nothing there. We are from here to here. So from here to here to here. So that to that. And what you'll notice is it doesn't set up that often. And it can be, as I said, it can be a little bit tricky to spot this. Okay, but when you do see it, it can be a very, very reliable little trading method. Okay, you see here, price stays below. It's kind of double tops, but you'll see we kind of make this higher high here in place. We'll move right back into the range. Okay, as I said, if you can find it in a nice trending environment, that's where you're really going to score nicely. Okay, you see, like here, for example, we're obviously in a nice trending environment. Okay, here to here, price drops, back, stochastic again, higher, price lower. Okay, so pretty straightforward, I think. Any questions, guys? We can use it on a 15-minute chart as well. Okay, obviously we need to just kind of, understand the smaller the time frame, we are getting, chopped up. It's more corresponding like that. Okay, another one there, moves higher, price lower. Like dollar yen, let us have a look at the dollar yen. Okay, so here we are, just have a look and see. So you see we kind of start breaking up here. And notice here, for example, okay, pulls right back, starts to move up, pulls back, rallies, pulls back, and look where we are on the stochastic, okay? And you can use, whatever you want as a trend direction. Let's use like a, I don't know, 50 period, maybe, simple average, something like that. I don't know, I'm just thumb sucking it. So, you look for pullbacks. So in terms of entries on these things, what you look at doing is draw your fibs. Okay, so now we're looking at more like a strategy or something. Draw your fibs between these points that we marked off, and then look to kind of get in, 786, 618 area, somewhere around there. That would be like your buy zone. Okay, so you look for a nice retracement. Then you've got to stop below the low here. Okay, and then simply just look for extensions, okay, like I show you guys with the harmonic stuff, okay. 127 extension would be a good play, or even just take it off at the highs or something like that, so for example, like this swing here to here, we're looking for a pullback, so we get a pullback, okay, 786 to 618. Maybe you just want to buy at the 786 area, okay, that's also fine. But let's say we buy it there, stop kind of below there, and then we're looking at this swing here, take profit here at the 127, so 27 or 15 or whatever the case is. Okay, makes sense. Unfortunately, they're not all going to work out. Maybe we want something a little bit, I don't know, maybe bigger than a 50, maybe 100 or something like that. Whatever you can use. I find the Bollinger Bands work very well. Okay, that's it. Okay, just throw in, but the important thing is look to trade with the trend. Okay, if there's no trend, that's when you're going to start running into trouble. You can see here, for example, there's a very shallow, very shallow pullback here to price. Okay, so if we go and let's go and look at the daily chart, right? So if we go and put in trend Bollinger Bands, okay. So you'll see at the moment, obviously, we're chopping about, right? Chopping about, doing nothing. But at this point, after this candle here, we had very much from there to there to look for longs, okay? So we just follow price along on this swing here, and we're kind of just looking for some kind of decent pullback along the way here. We were here to here. No, sorry, there. From there to there. Okay, there's a shallow pullback. Here, from there to there. That one would have been a decent play. Okay, so we've got direction of the trend. We've got our reverse divergence pattern. Okay, and then, as I said, maybe you want to buy it on a pullback. I would always buy it on a pullback, okay? 786, as you know, is my favorite number. And then you could just extend an extension perhaps like that, and maybe look at something like the 127. So that would put you in around 40 points for around 10, 11 pips. So you'd have some decent R on the trade, and you wouldn't have to be right many times, okay? You'd obviously just need to be patient. Okay, I think a lot of guys battle with patience. Patience and discipline. Am I right in that? So that's kind of where we are at the moment. If you guys have got questions on that, obviously I'll be happy to go over that. Otherwise, if there's a pair or something you want to look at, or I've given you guys strategy wise, you've got a strategy now that you can use on top of that. I wasn't going to look at that today, but the main thing is to take away with this is your trend direction. Okay, so use this with your trend direction and you should find a decent bit of success on it. Okay, and then obviously for your intraday stuff, you can also look at like a 15 minute chart. Works pretty well. Okay, but as I said, make sure you're in a decent trending environment. Otherwise, you're gonna come off second bet. So you want to look at a few other pairs. We've got the New Zealand dollar coming off this area now. Okay, let's just have a look out of interest. If we had this level here that we've marked off, let us go and put on our stochastics, okay, and just see what's going on. So if we've got anything happening on the divergence side of things. So let's just check like a higher time frame. So if we looked at kind of swing high here or here, this is no good to us. This one here looks like it may do the trick, but we'll need to get a bit of confirmation because as you can see here, we haven't hooked down. Okay, so the stochastics is just literally following price, which is up. Okay, and I know a lot of guys, momentum guys, are looking at these two lines as strength, as trend strength. Okay, so they will literally just be looking for longs as this thing's heading up. Okay, and when it's open like this, you should hopefully know by now that it can literally fly. Okay, can literally fly up the page. So that there's nothing on here. You can see obviously we've got this swing high here, and stochastics all the way down. Yes, nothing really showing up on the hourly. Well, possibly, but still a little bit on the early side. Still a bit on the early side. So nothing really happening there. If we look at let's just look at this quickly. So we're putting the trend direction daily, and let's just see what's going on there. So nothing happening there. We're inside the band, so we're not looking to go short. Okay, so you can see how you can use those things as like filters. Maybe you just want to a moving average or whatever. So have a look at some of the other ones. Let's just look at, remember we had a few setups here. We had one here with a bat that's set up around this area, and then there was another one that's set up over here. So if we then add it in our stochastics, let's just check this out. So from this high here, this high here, we've kind of double topped there, but if you look at the reading on the stochastics, so we got this peak here to that high there, and we've basically just double topped. Okay, so that could have been a possible signal. You probably see it better on the 4-hour chart, I would imagine. This one here, let's look at this. We've got a point here. So you see we've got this high to this high. Actually, no, it's that high there. So you could have been looking possibly at that level there, maybe. Okay, it's just added weight to it. It doesn't, I suppose it doesn't really look very exciting with the harmonic patterns, but it does work exceptionally well. Like in the strategy we're developing at the moment, well, it's developed, but the one we're testing at the moment, using divergence with that, the reverse divergence to get in where the trend works a treat. Okay. But as I said, the main thing is to check your trend. Okay. If you don't have a trend, then stand aside. But the main thing, you've got to have patience, guys. That I can't help you with. Any other questions, guys? This Aussie, this New Zealand dollar, what I'll be watching for this one is obviously coming off here. If we break below this low, this is obviously just on a side note. If we break below here, then we can look for a possible pullback. Okay. Have a look at your screenshot here. So you're looking up at the 886 area. Where are you taking a swing from? Yeah, that swing is kind of a little bit iffy. I'd be looking at this swing here, and the problem is, as I mentioned before, I would have been looking at this high because it's a lot clearer than this one, which doesn't make much difference, to be honest. Missed it by a tick or something. We may get another push. I mean, we've got one hit, two hits. Maybe price finds buyers and we get another bid and a spike up. That could be, that could be an option. So something like this, yeah. So 1, 2, and that third push would get you in around there. I think you see we've got a tiny little level up there, right up there at 85.23. That could be a juicy little sell area right there. Okay, and if we get it with that third drive popping in there, that's going to be a high probability. It's just its overall structures is pretty nasty now. Yeah, 85.22. Yeah, I mean you're on the number there, 85. Oh, you're up there. Okay, yeah, yeah, 85.23. Yeah, that's the one I just mentioned. Let's check the daily. I don't know, like my daily, look at where my daily level is here, right? 85.21. So it's pretty much Actually, yeah, how come it shows that it looks like it's been hit? That's because of this. Okay, yeah, no, if it goes up there, it's worth a punt, definitely. Just make sure you know where you're going to be taking profits. Just check that out. Yeah, it's. I mean, as I said, the structure for me personally, it's a bit messy. Okay, it's a bit messy. If you compare this to this, you see straight away which is the preference. I far rather prefer to go for the Aussie than the Kiwi, just because of all this other mess we got here. This is all kind of chopped out. It's just it's messy. Okay, but it's, you can see the level's holding. It is cap in price, but if we get another surge at third driver in there, that could be a short. It's just the way I see it, right? I mean, I'm not saying it's right or wrong. The butterfly, yeah. As I said, this if you're looking at that level there, you kind of just off there. There's kind of the 786. If you look at this one here, better structure, but this one stalls out at the 886 to me. And as such, I would be looking here at 1618 area. Yeah. Yeah, and I'd rather be a little bit more patient, just wait for the juicy ones. But yeah, I mean, if you're short there, you know where you're going to be. Well, I don't know where you're looking to take profits, but if you got that in, then your pattern is, my target would be down here, so it'd be about 57 points or something. Okay. So you just want to run it there, that's fine. But, as I said before, just be wary. The numbers need to make sense, okay? You're in the business to make a profit. But, the level's working a treat. Okay, I'm glad you guys are kind of finding the levels holding and working for you. You just got to goes with confidence, that's all. So now this is qualified as a Quasimodo. Okay, left shoulder head. If it pulls back, you're selling short on the 23.6, exactly at 85.09. Okay, small stop above about 10 points is more than sufficient. And then you got to look at the downside. Okay. Then you could maybe look at targeting down here possibly. It's giving you 2R if it pulls back and pays. So you guys happy? Sorry, we're going off topic a little bit. You guys happy with the divergence, the reverse divergence? Yeah. Because I will be mentioning it more in the I will be mentioning it more in the testing phase when we start looking at the different setups. Okay. Okay. So I'm going to wrap it at there. If there's no other questions, guys, you got to give me a few minutes. I've got to prep this forex tester thing and stuff. It takes a bit of a while, and then I'll be back in a few minutes, and we can go over the next session. Okay. And if the testing's boring, let me know. But I'm kind of doing it for a reason. So there's method in the madness. Okay. Nice one, guys. Speak to you in a bit. Cheers.